Simeon, it's a kind of a one nervous point after. I mean, it's not everything, and we don't think retail sales broadly are breaking down. So why are so many stock-specific names not working?
Hey, Kelly, great to see you. So listen, you and I always love this conversation because this is a conversation where there's uniformity of fear, uniformity of narrative, maybe even uniformity of stock performance, but there is not uniformity of actual performance. We're seeing a distinction. You had LVMH up there. Hermes reported this week as well, looked very different. And so I think it's clear that we have these fears. It's clear that we have the consumer environment as we see it is no longer as healthy as it seemed to be. But you're actually in an environment where execution matters, and we're seeing distinction when it comes to actual company specifics. And so right now with the election, with all the macro, obviously that's taking a little bit of a backseat in terms of the stock market today. But what you and I are supposed to do is look out beyond and say, are there businesses that are doing better than others? And I think unlike in the last 3-4 years since the pandemic with the rising and receding tide, the answer to that right now is yes.
So you think this kind of goes back to pandemic and a mirror of what we've seen in other industries where there were areas that worked really well. And Steve mentioned as well in the GDP numbers, we've seen inventory destocking and then restocking. And I hear it could be a bad back to school season or a tough Christmas. You just unpack that for us a little bit more.
The beauty of this sector, it's so easy to create these stories. It's so easy to just effectively round everything up into one narrative. But to your point, beginning of COVID, there was no inventory at all. And there was stimulus. So everyone spent and retail looked great. The next year, there was too much inventory and we were on the other side. So everything looked bad. It didn't matter how good of an operator we were. Everyone was winning. And now what you're seeing is a complete distinction there. And so last quarter, we'll see what happens in the next 3 weeks, so to speak. But in the last quarter, you watched Coach do well, Michael Kors not, Walmart, yes, Target not, Aerie, yes, Victoria's Secret not. Companies that sell the exact same thing to the exact same people saw completely different results. And that's what you want to see if you're A, a really good operator, and B, a really good stock picker. And so I think when everything clumps together, that's when these things get difficult. But if we take a step back, we're actually seeing that delta in performance. And so to your point about luxury, we just saw this week, it looks like, because the largest companies are telling us there's a problem, it looks like there's a problem. But one step deeper, and you're actually seeing different results from different companies. And that's what I think is worth keeping an eye on.
Simeon, it's Dom. If you look at the chart for stocks like TJX companies, it lends you maybe to believe that that kind of value orientation, that tilt towards value spending, the lower end of the consumer income spectrum has been where the momentum has been so far this year. Does it continue? And if it is to be true, what exactly does that then say about the huge fourth quarter retail season that we have coming up at the end of this year?
Right. Hey, Dom. Yeah, no, I think it makes total sense. Like, TJ is a fantastic business. The amazing part of TJ, and I'm going to very sad for what I'm about to say because it's such a lazy comment, TJ wins in all environments because the chart looks great now. It also looked great if we cycle backwards for a little bit as all the luxury businesses were doing well as well. TJ is very important to vendors. TJ is obviously important to consumers. We get the trade down you're talking about. But on top of that, these vendors that need to move a lot of units all of a sudden can do it invisibly with TJX. You and I have talked about this before. I really believe TJ wins because they don't have e-commerce, not in spite of it. I think that's a very, you drop all your pallets off at TJX and no one knows that you get it. It just moves. And so I think that you will see in a trade down environment, TJ do well, but I think they do well on the other side too. And I think that's a TJ specific thing. But I think your overarching point makes a lot of sense. In an environment where we are belt tightening, you will see that trade down. My point, though, is to say there will be winners at the high end as well, and there will be losers at the low end as well. You have to be a good operator, and that's what this environment leads into. And that's a good thing.